all expected to generally work until the age of 65. But what happens if we are disabled and are unable to go to work? There is insurance protection out there that's referred to as disability insurance. I want to talk to you about disability insurance today, but I want to give you an analogy that I really want you to think about. It's going to sound a little hokey, but I want you to go with me on this. So let's say that you brought home a black box, and you plugged that black box in the wall, and you sat the black box right there on your living room couch, and all of a sudden, boom, out pops a clean, crisp $100 bill. Benjamin Franklin and all. I mean, legal U.S. tender $100 bill. And boom, boom, there goes another one. There's another $100 bill that just popped out of that black box that's sitting right there on your couch and lands right in your living room. And then boom, there's another one. So you don't really know where that money's coming from. You know it's coming from the black box. I mean, it's just plugged into the wall, but why is it, boom, another $100 bill? Why is $100 bills coming out of that? Would you do anything special to protect that black box? Would you take any precautions to make sure that that $100 bill that pops out of there continues? I know I would. I would probably protect that black box from theft, fire, water damage. Boom, there's another $100 bill. I mean, I would protect that black box from a maintenance failure, even the electricity that's on the wall. I mean, I'd probably go buy a generator, so if the electricity to the house failed, I'd still have electricity to my black box. Well, if you haven't figured out by now, that black box is really the breadwinner of the home that comes home at night and sits on the couch. And automatically, every 2 weeks or month or whatever, that money's deposited right into y'all's checking account. You probably have some protection on that breadwinner. You probably have protection in the form of life insurance if the electricity on the wall should fail. Whether you should have group life insurance or an individual policy, I've talked about that earlier. And generally, you should at least have the group that they give you for free. But I would absolutely encourage you to look at getting a life insurance policy outside of work and take a look at the video I did earlier that will explain a little bit more why. The other thing you want to protect on that black box, and certainly the breadwinner, is against a malfunction. And the malfunction would be disability. So generally, here's how disability insurance works. We get 100% of our income when we go to work and everything is going well. But if we should become disabled, the disability policy will kick in if we're unable to go to work. And we're going to get about 2/3 of our income will come to us from our disability insurance policy. So just for sakes of round numbers, if I'm making $100,000, then the disability benefit that I will receive will be around $67,000. And that $67,000 will last until I would ordinarily turn age 65. So if I get it now when I'm 51 years old, I'm actually getting a policy that's going to last for 14 years. And the reason why they automatically end at 65 is because that's when we ordinarily stop working. You do have the ability to get a policy that lasts longer than age 65, but you would have to expect to pay a higher premium for that. So other things are to think about when it comes to disability. One, you're going to want to have an elimination period at some level. So the elimination period can be 30 days or 60, 90, or even 180 days. The longer we have as an elimination period from when we're ordinarily disabled to when the policy starts making payments, the longer that period is, the lower our premium is going to be. So if on day one I'm disabled, I want the insurance company to start giving me that benefit. There's no elimination period, they're going to charge me the highest premium. But if I decide to wait 30 days, then maybe within those 30 days I'm no longer disabled and I get to go back to work. Or 60 or 90 days or even 180 days, which of course is about 6 months. So the longer the elimination period is, the lower my premiums will be. Many times you have a policy, a group policy through work for short-term disability, which lasts up to about 90 days or 180, and then a long-term disability policy which kicks in at about 90 days or 180 days. But there's some pretty interesting restrictions when it comes to disability through work. Oftentimes those restrictions include going to the emergency room by ambulance when you're disabled. Other policies that you have, an individual policy, don't have those restrictions. So if you happen to fall down at work and somebody drives you to your internal medicine, your ordinary doctor, and your ordinary doctor then has you go to the hospital where you're placed into care, that short-term policy or long-term policy that you have at work just might not kick in because you didn't go by ambulance to the emergency room. So you're going to want to double check with your human resource officer at work to see what are the triggering events that trigger you, or that trigger the care, I should say. The other thing to think about is if you are disabled and you're not going to work, then typically you have to be out of work for at least 8 days in order for the disability to kick in. So if you're out for 7 days, then you're going to wipe out any of the disability through day 1 through day 7. So you really want to double check again with your HR professional at work if you're going to rely solely on your disability policy that you get at work. So I would highly encourage you to get a disability policy outside of work. A disability policy is stackable. In other words, think of the ABC blocks that you played with when you were a kid. If you have a disability policy at work and it kicks in, it would go through that block of disability first, and then you layer another block of disability on top of that. So you actually have 2 policies, one through work and one outside of work. This is good and can be in your favor. So if the one at work does not kick in, then after the elimination period, the one you have outside of work will kick in. Now, depending upon what type of work you do, will depend upon the premium that you pay. So if you sit behind a desk and you speak to clients daily, like I generally do, then I'm going to have a lower premium for my disability policy because the likelihood of me getting injured is low. But if I'm on a roof swinging a hammer, laying tile down for new roofs, then my premium is going to be a lot higher if I even have the ability to get coverage at all. Remembering too that if I got a disability policy, an individual policy outside of work, and I carried it beyond my working period, and then got disabled later, that policy might just kick in. Where if I had a group policy at work and then I leave, that policy is not going to kick in. The other thing to think about is this. The expenses that you have are going to start going up pretty high if you become disabled. Whether it's going to be doctor's appointments, wheelchairs, other things, but your expenses are going to go up pretty darn high pretty fast. And your income is going to go down pretty quickly because you're no longer working. Well, the area between the income going down and the expenses going up, this area over here is debt. And you might be eligible for a workman's compensation if you were injured at work, or Social Security, disability, perhaps if you meet those requirements, but it's not going to be enough if you don't have a policy outside of work. The last thing I'll throw at you is this. How you pay for disability is very important. So if you're an employer and you're making decisions about how you pay for it through your compensation, you're going to want to make sure that you pay with after-tax dollars. It's not a new tax, it's just been ordinarily taxed, as opposed to pre-tax dollars. The federal government says we either get a pre-tax benefit with our premiums and then our benefit that comes to us is taxable, this would not be good, or we can pay premiums with after-tax dollars, again, just ordinary dollars that went into our checking account, and then our benefit is tax-free. That's what you want. So unlike life insurance that comes to us tax-free and major medical that comes to us tax-free, your disability, you have to make sure that you've set it up correctly. So you want to have your premiums ordinarily taxed. Again, it's not a new tax, it's just an ordinary tax that you pay regularly for, so that your benefit comes to you tax-free. And even though it's 2/3, that 2/3 would come tax-free, so it would actually feel better than if it was just 2/3 and you had to pay additional tax on it. Many of us have physicians that properly protect our body and our health. We have accountants and lawyers that properly protect us against taxes and legal matters. Do you have a professional that properly protects you and your family and your world against unexpected insurance risks? Here at our office, we don't just sell you a policy. We make sure that your world is properly protected. Give us a call at Robin Hill Insurance, and we'd be pleased to do a comprehensive review at any time.